Good evening, everybody, or whatever time you might be viewing this. It is at this end pretty much nightfall, 5 p.m. Eastern, Thursday, December 2nd. The market has just closed, and I thought that given some things that happened in my trading today and given some of the other things that are going on, plus the fact that it's been a while since we've done a video, I want to get back into doing these. So let's chat a little bit tonight. Lots going on at this end. I know that I've touched on some of the efforts in some of the recent posts. As I mentioned last night in the Breaking the Silence post, I was pretty much intentionally silent much of the last week in terms of blogging for a reason, and I'll just refer you back to that post, and I won't belabor that point. I want to start getting more back into talking about trading. And so you'll probably see the blog take back off in that direction again, in sync with the expected launch of Trading After Dark in the near future. It's been a really interesting exercise that's really involved a few different stages of development, and I've talked in the past a little bit about the technical aspects. I am now very comfortable with the setup. And one of the things I've done is actually I migrated back to eSignal. The jellies of the last course, and those in the networking room probably know that I've been using TradeStation to a large extent over the past, I'd say past year or so. But as I had been doing previously, and you see this in the jelly webinars, I've been using eSignal much of my career. And because of memory issues, eSignal takes a lot less memory than TradeStation. I've decided to go back to that platform, and am now very comfortable with how it works in terms of the production. And it's also a situation now where I'm starting to record sequences, and one I'm going to talk about today, actually, you'll probably find in one of the early beta releases in the near future. You know, I've kind of been thinking to myself when we launch this how I want to kick it off. You know, because I'm going to have several recordings available, and it's going to be a matter of splicing all that together. So, as I said when I thought about launching this a few months ago, it's going to be very important to me to show balance, and I want to show profitable sequences, unprofitable sequences, good moves, and even some bonehead moves. I've got to continue to show the whole shooting match in terms of what this business is about. I want to continue to emphasize the fact that, and I tell all the jellies this before we start any of the courses, that I do not profess to be perfect, and any trader that says that to you, I certainly wouldn't believe him or her, and it's a matter of kind of dodging landmines and sidestepping yourself to a large extent. And it's interesting because when I've done that over the years in my teaching, there seems to be a collective sigh of relief in terms of people realizing that they don't need to be perfect, and that's one of the things that I want to come across in these efforts, and that is seeing how I might navigate around a particular situation without hopefully shooting myself in the foot. And if I do shoot myself in the foot, then I want to show that as well. So, you know, it's going to be very interesting and exciting. So anyway, back to today's sequence here. I was pretty hard on myself throughout the course of the trading day because of a couple of things. I've been battling a head cold, first of all, and decided I needed my sleep. And so most of the jellies know, though, that on MATD, morning after trend day, I expect to be up at 3:30 a.m. to trade ES off the Europe sequences, and lo and behold, the textbook pullback came at 3:30 this morning when I was dead asleep. And I thought about this last night, and I just felt that I was really dragging. I was not feeling well, and I felt I needed my sleep. And so I ended up getting up, you know, around 5 o'clock or so, and was kind of kicking myself at the time. And then it took me a while to get my head into the game. And when you look back at today's sequences in terms of getting price retracements, there were really two. One was right around 3:30 or so, and then Europe turned and led us higher. Just a textbook sequence, and I'm sure that the jellies who trade in Europe nailed that, and hats off to you. And then the other opportunity was when the ECB was coming out with its press conference, and you had some gyrations right around 9 a.m. Eastern. I was trading that and actually got in a bit early. I knew I wanted to be long, but I did get in a bit earlier than I would have liked to in hindsight, and I was pretty heavily long around 11:05, 11:04, and I didn't trade that particularly well because I was early and I was a bit heavy, and again, I want this will show up in one of the sequences in the trading after dark when we get it going, but. Suffice it to say that I was really kind of ticked at myself for a good part of the day, especially because those are the only two retracements in terms of price, wholesale prices. Everything else was just oversold stochastics on price support, where you had to take those for scalps, and certainly I got some of those and some of the short extensions. But anyway, I was kind of miffed with myself until I actually replayed the recorded sequence that I had done. And I won't, I'll keep some of the surprise for later on, but suffice it to say that when I replayed it just a few minutes ago, and it's about a 15-minute sequence between, I'd say, 8:45 and 9, or maybe 30 minutes, 8:45 and 9:15. I'm watching it very, very carefully, and I really couldn't fault myself a whole lot for how I managed it. And the more I actually played it back twice, and the second time I felt even more comfortable with how I traded it. I got in early, I was a bit aggressive, and I did not, though, barf it out on the probe through the prior swing low break, which I want to talk about that in a second too. And as I started coming back up, I was able to get out of that position. I want to get back in cash, reset myself so I could get back in again fairly heavy on any further price retracements. Obviously, though, from that point, the market just took off and never pulled back in terms of price. So we had certainly a lot of long-term buy signals trigger the long-term asset management effort that I'm involved in. We triggered that yesterday morning when we gapped up and broke the consolidation, broke the recent triangles finally, and came down a little bit in the morning post-U.S. Open, but held some key levels at that point, signaled the buy triggers on that side. And in terms of intraday trading, very similar methodology. And today certainly, once the U.S. market opened, just shot up. Fairly difficult to get in terms of price retracements, but you knew the whole world wanted to get in, and the market's going to make it tough. But anyway, I thought it was a good example in terms of managing basically to stay alive, and that's the name of the title of today's post, Staying Alive. I could have actually done very well, made a lot of money today, but I didn't. But I'm actually, now that the day's gone on and I've reviewed that sequence, sort of like going back and watching your swing, I'm actually very, very satisfied with how I managed that sequence and then the rest of the day. And sometimes this business is about staying alive. There's 250 some trading days a year, and you're not always going to hit it right. And so that's important. I want to get back to on the concept of markets probing swing highs and swing lows. And I know I've talked about this before. I know the jellies are probably sick and tired of me talking about this, but there is still one glaring error that a lot of traders make, and I still see it to this day, and that's to set stops right above or below a recent swing high or swing low, because 9 times out of 10 the market's going to grab that, and you're going to look so foolish when you stop out on that before the market continues to do what you expected it to do. That's what the market does, and so it's really a sucker stop. And you saw that this morning when on the ECB gyrations in both Europe and in the U.S. session, where the market took out the prior low by a couple of ticks, if that. And yet I see time and time and time again that people are getting shaken. If I had used that as a stop, frankly, I was a bit early in my entries, but if I'd used that as a stop, if I had some lame, consistent 3-point stop, which is ridiculous, then I would have been down probably about 15 grand. And instead I came back, and basically the sequence was flat, allowed me to get my head back in the game and position for the rest of the day. So it's just a warning, I guess, to those of you who really trade out there that and many of you I know this. In fact, what we've done in the jelly room a lot lately, even though I haven't been in there for a few weeks, as I'm working through some of these other things, the idea usually is to let that stop trigger and then get yourself in. And you'll often find that that's just an outstanding entry point. And it's also, I guess, another reinforcement in terms of why it's important to manage risk with size and not with stops. Again, we've talked about that in the program many times. Premise-based stops fine. When the reason that you get in your trade is no longer valid, then you shouldn't have any position on. But just because you're a bit early in an entry, but the idea is still right, manage your risk with size. It saved me on May 6th, saved me today. Don't barf it out at the lows, and live to fight another day. So again, the title of today's post is Staying Alive, and that's often the name of the business. So if that puts you at ease a little bit, if you didn't do well today, great. Swing traders, I'm sure, cleaned up today. Longer-term asset management did very well in terms of following through on yesterday's triggers. I'll talk more about that in the future. It goes back to something I mentioned several months ago in terms of taking a CIO role in addition to my trading, which will continue with a firm, and it just goes hand in glove using a lot of these short-term techniques for longer-term asset management and having some fun with that. And so those are some things I wanted to chat about. Let me just look at my post from yesterday real quickly here. Again, as I said on emails, folks, I know I'm getting a lot of people asking questions and wanting me to troubleshoot their trading. To do that via email or even via the blog is just not right. And I'm not even going to try to do that. I have reached out to a few people who I thought have needed some help and were in some pretty dire situations. But as I've told those individuals as well, please understand that there's a big difference between trying to help stem the bleeding and really developing yourself into a top-notch trader. This is a very difficult business, and you need your formal education, whether it's with me or somebody else, and you need your experience. And again, keep in mind, folks, it took me 10 years roughly to reach the level that I reached a few years ago, and that's just the way that this is. Other things, again, thank you very much for those that contributed to the Grow Uganda effort. They had a wonderful trip. They're going to be posting pictures shortly. We were able to fund 3 individuals that would not have otherwise been funded through our efforts. And when I heard some of the amounts that came in from people that I don't even know, but who contributed through this blog, I was really, really pleased. So that's it, I guess. Tonight, tomorrow's kind of a MATD Part 2. Probably get some better oscillations, especially with the employment data coming out. So just some quick thoughts here Thursday, December 2nd. Trading after dark's getting closer. Photon. My first day with Photon as well. Lots going on at this end. Very, very pleased. Very, very pleased. Made my first trade. It was a point scalp on the short side. After the market probed up a little bit this morning, I think I had 1550 was the short, covering at 1475 to 14 and a quarter, if I remember. And so I'm still using both TT and Photon, but I'm really going to give Photon a good look, and I've got one of my accounts with them. Damon and the folks over at FuturePath have just done a wonderful job with that, and kudos, and I'll let you know more as it goes on. So anyway, thoughts from this end. Have a great evening. We'll catch you later. Take care.